Cool. Yeah, thanks everyone for taking time on a Sunday morning. Really appreciate your time. Um, oh, second best. Okay, cool. I hope I think we'll be able to discuss a lot of stuff about global investing. I know it's a topic, which is the need of the hour. I actually did my first global investing webinar in the month of Jan, and from then on, a lot of things have changed. Interestingly, rupee is sliding unabated, and it seems like it will be seeing a century mark sometime very soon. We don't know what is going on, but I think let's not get into the economics there. But then it will become a macroeconomics session here, and sort of exchange currency, whatever stuff. Okay, let me quickly share my screen and let's get started. How many of you are actually scared, Marvin? Just to put a little bit of a poll on, like, how many of you are really concerned of, like, the rupee fall at this point of time?
Of course, it's a concern.
Sorry.
Of course, it's a concern. It is going to affect us in very near future. So it's a bit worrisome.
Yeah, people are saying 150.
150 is little too much, so that's like too pessimistic, So I don't think 150 will happen, but like, at least we'll touch 100 sometime very soon. So let me give you a little bit of a background. So I'll might be take a couple of examples and all that stuff. So most of you know me, if not, I'm Kiran. I run Soho Wealth, and we run, like, multiple other products as well. Treasurepen is one of our product. You can feel free to check it out. There is new asset class, which is SIF. We are actually building something on those lines. SIPprime.com. So there are a bunch of work that we do, especially to help investors invest, very intelligently, to be frank. Let's get to the actual session today. What I will be doing is, for the next 45 minutes, I'll be covering, these topics. Why global? Why now? What is exactly, how do you invest, from India? What are the options available to you? How does the taxation look like, and where can you get started and how to get started? Okay, so the primary goal is for you to actually make money, take an action today, understand and like take an action today, right? So the first thing is, why global, right? So I think we all understand, there is rupee that is, getting depreciated, etc. and all. So what I wanted to do is, wanted to take a quick example and then actually, guys, if you're not, okay. So I want to take a quick example and then show you. I think this is what I have been teaching our students as well. So for example, like, imagine now there is a global investor that has come through, right? And the global investor has put in $1,000 somewhere around, like, 6 months before, or somewhere around 8 months before, somewhere around October, November timeframe. So around October, November timeframe, rupees hovering around 83, 84 bucks. So $1,000 converted into, INR is how much? 83,000 rupees is what the foreign investor will put in into the country. Okay. Now imagine, right? We have for God's sake, we have given the highest expectation that, like, 83,000 rupees. Let me quickly show you on calculate as well. So 83,000 rupees plus, imagine they have generated 12% interest on top of it, right? That is, sorry, 12% return on top of it. That means, they would have made somewhere close to 93,000 rupees, in the last 6 months itself. And I haven't even taken the yearly proposition there. But the problem is, they have put in the dollars at 83 rupees. And as of today, the dollar is hovering around 96. Okay. Now, what is going to happen? Divided by 96. At the end of the day, they are going to be, even though they have generated 12% return, their actual value has come down to $968. They have put in $1,000, but, like, the money that they are making is $968. So ideally, what is happening, instead of, though it looks on paper that they have generated 12% returns in INR terms, they're not actually making the money. In fact, they are actually sitting on a minus 3.2 loss, with regards to dollar returns, because they can't take the, rupee back to their country, right? They have to take the dollar back to their country. So this is one of the prime reason why FIIs are selling unabated. Okay. Added to that, of course, with due respect, I think the Indian taxation is, so nonsensical, not only for the domestic institutions and investors like us, but also for the foreign investors. So these are like, one prime reason why the FIIs are selling unabated, because there is no point of for them to make money. I'll show you in a bit, like, where the money is actually going towards, right? Now, how does this matter to you, right? So for example, like, why you need to have a dollar investment in dollar currency. So I'm 100% sure most of you had, some sort of international travel, like, wanted to send your kids outside for study purposes. Could be n number of different reasons there. Okay. Now, what is going to happen here, right? Again, the same example, your $1,000, at this point of time, where if you have to send $1,000 out, you have to, shell it on, you have to shell 83,000 rupees in 6 months ago. Whereas if you have to, send $1,000 out, you have to shell close to 93,000. Okay. So your value of rupee value is actually falling like crazy, point number one. And when you want to get an exposure to the foreign markets, whether, as I said, education, in health, or like, vacation, etc. and all, you are shelling more and more rupees. So it doesn't make any sense at all, in the first place. You got the logic, right? Both inbound and outbound, like, the rupee depreciation is killing both sides, both domestic and the foreign investors. Now, coming back to this, I think let me maximize this screen a little bit. Just give me a second. Yeah. Now, why global? I think this is what it is. We'll not go into much more, statistics, etc. and all that. Holding wealth in one currency, blah blah blah, and all that stuff, right? So primarily, this is exactly what has happened, right? So the same example that I have shown you, the higher education cost in 2005 versus 2025, right? Earlier, it used to be 10 lakh rupees, but with the same currency value, you have to shell almost like 41 lakh rupees. It doesn't make any sense at all, right? So what is the solution there? And before that, now this is the data that we actually mapped over almost like a decade. And if you see in the last 10 years, right? Oh, India was the best performing market, only I think once or twice. That's pretty much it. I think, yeah, twice, right? In 2023 and then 2014. Except that, the markets keep rotating in terms of, like, Japan was, some top performing market, US at one point of time was top performing market, South Korea, etc. and all that, and China in 2024. So the point what I'm trying to emphasize here is you can't keep your, all the money in one single basket, which is you can't keep all the money in Indian rupees and only in the Indian equities itself or the Indian investments per se. Now, what is the solution there? So the solution is this, right? What we generally suggest is you have to keep 60% into India. Of course, patriotism, rupees, India growth story, yada, 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 and all that stuff will come into the picture. You keep 60% in India. I'm not saying like you have to pull 100% out of India. Keep 60% in India in different formats, different investments, but you need to have 40%, exposure to global markets somehow or the other. Right? How we will see in a bit. But our, suggestion has always been, if you are an investor, keep 60% of your investments in India and 40% should be global. Global could be, across the globe, right? It need not be only United States, and it could be US, China, South Korea, etc., and all that. Okay. So, on that note, one more thing that I wanted to show you, just in a bit is, you're also, by going global, you also get an exposure to multiple other companies, right? These companies unfortunately are not available in India. I don't think we even have a comparable company, in India as well. Of course, for Airbnb, Oyo was there, but like Oyo was never a publicly listed company. I don't know when it will go public. But like if you see Lululemon, right? Lululemon, right? How many of you know? It's actually yoga athletic wear company. It's a crazy company, right? Similarly, Nintendo, which is into the gaming, so none of these companies have any comparables to India. So why do you leave money on the table when you can make money outside, India as well, right? Let me quickly show you two charts here, which could be mind-boggling for you. So, so if you see, one of the what exactly has happened is, what exactly has happened is, the South Korean market actually performed exceedingly well in 2025, and it continues to be performing, exceedingly well in 26 hours. If you see here, right, from 2025 to 2026, even until recently, it's been only like, not even like 5 months into the this year. From 25 onwards, it generated almost 200% return. This is the Korean market by the way, right? Similarly, Nvidia, has generated close to 400% return for you from 24 onwards. Okay. So the point is, at one point, like, there is rupee depreciation, the value is getting eroded. But on the other hand, there are opportunities on the other side of the aisle, both on the east and west, which is giving you humongous opportunity for you actually to participate, make money from that. Okay. Now, how do you go about it, right? So primarily, it's all fine, but at the end of the day, how do you actually participate in the market? Okay, so that's what we are all here for, right? So how to invest? That's $1 million question. What are the opportunities that are available? So, like how? Let me give you a little bit of a picture, before deep dive into this, right? So what happens in the Indian market? You can directly invest into stocks, which is your stock market investing. Within stock market investing, you have two modes, right? One is active investing. That means like, you actively trade stocks, you actively take positions. And there is another thing called as a passive investing. What is passive investing? You actually buy Nifty Bs, Bank Nifty Bs, which is your passive investing. You buy the index and sit on it. Okay. That's one part of like, how you actually, can participate. What is the second mode? This is direct. Within direct, there is direct investing and passive investing. And then the second option that you have available is, investing in mutual funds, which most of us do, whether it is SIP route, etc., and all that. SIP is, mutual funds are again that, there is a fund manager who takes positions on your behalf. You pay a certain fee, which is your expense ratio. They generate returns for you. They do the strategy, they do the allocation, everything. Okay. That is the second way of participating in the Indian market. What is the third way? When you have a certain amount of money, say something like 50 lakhs, etc. and all, then you put money into, something called as a PMS. What is a PMS? They create a curated portfolio for you, and then, the fund manager will invest, on your behalf and will generate returns. Then next, what is the next other step? AIF category funds, which is a 1 crore, minimum ticket size. Again, like you subscribe to that particular fund. Again, the fund manager does the allocation and will make you the money. Okay. So there are multiple steps here, right? Direct participation into the stocks, active and passive, and then mutual funds, and then PMS, and then, there is AIF category, which is 1 crore category. So this sort of exact similar structure is also, fortunately available for the US market or for the global investing as well. Okay. We will go through that in a bit. We'll go through that here. So primarily, this is what I'm trying to say. There is, if you see in the last row here, direct investing. And then the first part is Indian mutual funds investing abroad, India listed international, ETFs, and then the PMS, that's sort of the route rate. Okay, let's go through this one by one. Let me start actually with, how to invest via mutual funds, because that's the best route for you at this point of time. Because how many of you know there is an LRS limit? There is something called an LRS limit, and the LRS limit is 250K per individual in a financial year. Everyone knows that?
No idea.
So primarily, you can't say, imagine like if you have so much of money, right? And you can't take the money out. Okay. The reason being, RBI has a restriction. What RBI says is, if you are an individual, if you are an Indian investor or an individual, you can actually take out $250,000. I think something, do the math here, right? Something close to 2 crores, every year. Sorry, in every financial year. Okay. So our financial year runs from April to, March. So ideally what you can do is on March 31st, you can send 2 crores, and then April 1st, you can also send 2 crores. Okay. So ideally in a calendar year, Jan to December, you can actually send 4 crores outside. In a financial year, which is April to March, you can send 2 crores. Okay. So ideally you can actually send 4 crores in a calendar year. Go by that, right? 4 crores per individual, on a PAN basis. So for example, if you're a family of 4, you can ideally send 16 crores outside. Okay, that means when I mean by send, right, you can actually take, 16 crores outside and can actually start investing. Okay. So that is what is called as an LRS limit. But unfortunately, um, what Indian government also does is, they don't want us to take the money out. Okay. So there is something called as tax deducted at source. If you are actually sending more than 10 lakhs, they will actually deduct some 10%, tax there, which actually goes into your account only. You can claim it when you are filing income tax next year. But ideally, the money will be sitting with the, income tax department. So what I'm saying is that is not an ideal way to start with, in terms of, taking 250K and going direct, the first point that I mentioned. The second best ideal way is investing via mutual funds into the global investing mode, right? There also there are certain limitations. Unfortunately, it is not that easy to actually invest, into a global, because again, RBI has certain limitations. We'll go through that. Don't blame me, or don't you can blame the government or RBI, but they make the life of Indians super hell, unfortunately. So what are the options available for Indian investors to invest, abroad? Let's start with the first option, which is the Indian mutual funds route. Okay. So there are a couple of mutual funds, I have given you examples. You can take a screenshot, or ping me after the session, and I will share the recording and the PPT as well. So Motilal Oswal Nasdaq 100 Fund of Fund, there is Franklin Edelweiss Parag Parikh Flexi Cap Fund. What these funds do is, they directly invest into, these are more of passive funds, right? They are not active funds. So it's like there is a Nasdaq 100 fund and Motilal invest into that particular fund. Okay. But anyway, you are getting an exposure to Nasdaq companies, sitting in India. Okay. So this is first way of investing, identifying those mutual funds and investing abroad. Okay. So, let me actually show this one here, right? Now, there is one particular challenge within the mutual fund industry, especially what RBI has done is, so since there are a lot of investors like you and me who wanted, global exposure, right? They want to participate in, just know how I have shown you how Korean market has generated 200% return, how Nvidia has generated 400% return, right? So people wanted to participate in those markets and wanted to generate money. So there is a humongous demand for, some of the, mutual funds that are investing abroad. Of course, I'm not getting into the specifics of what each fund is all about, what is the underlying factor, where it invests, etc. and all that. But there is a limitation, unfortunately, by RBI. The limitation is this. Sorry, my bad. Yeah. The limitation is, I can talk about that. So the limitation is RBI went to all the mutual funds and then said, I think you guys are taking so much of money outside, which is what I don't want, because of the forex or whatever stuff, etc. and all, So what RBI and SEBI has combinedly done is, for the entire mutual fund universe, there are close to 44 mutual funds at this point of time. There are new ones coming up at this point of time, right? Like Capital Mind and all those guys. For this entire 44 mutual funds, you can actually maximum send $7 billion only outside. Okay. So combined, the whatever the screenshot that you are seeing on my screen, right? combining of all these funds, right? The maximum money that can go out of the country is only $7 billion. That's it. Okay. 7 billion is something like close to 56,000 crores, which is nothing, to be frank, right? Because the mutual fund market is so big, I think it runs into a couple of lakhs of crores, at this point of time. And what RBI said is, per mutual fund, the maximum limit is $1 billion. For example, if Motilal, has created global fund, it cannot actually take more than 1 billion subscriptions from, Indian investors. If it is more than 1 billion, they have to stop accepting subscriptions. You got the point there, right? So the maximum is 7 billion across all the mutual funds. So the problem there is so much of demand. Everyone wants to invest. So what will mutual funds do? They will actually, once they reach a certain stage, they actually stop accepting subscriptions. So that is where you actually see here, right? Where I have put the notes there, capped, open, closed, capped, open, closed, etc., and all that stuff. So you need to keep a track of which funds generally open at what point of time, and you participate in that game. Okay. So it's not that they're opening for fresh subscriptions, etc., and all. That means they're not opening the new ones. The existing ones they wanted to sell, there is a gap that is open. You go and actually sit and buy that particular mutual fund. So this is one of the limitation, but unfortunately or fortunately, this is the best route for you to act. If you are a retail investor, this is the best route for you to get an exposure to the global market. Okay. So there are multiple funds that are listed here, China fund, US technology fund, emerging markets fund, etc. and all. I think you can also take a look. If you see the Kotak Global Emerging Market Fund, it has generated almost close to 41% rating. Okay, last 1 year. So that is 1 year return. So how many of large cap funds or mid cap funds or small cap funds have generated that much of return for you, right? In the domestic market? No, right? I'm not saying that, you have to take out all your large cap, mid cap money and put all the money here. But going back to the point, 60% can be there, but 40% exposure, should be here. If you see again here, right, the HSBC Global Emerging Market Fund, it has generated 47% return. Okay, crazy amount of return. You don't do anything. You just buy, into that particular fund and then sit on it. Okay. So that's the one way where you can actually start looking into investing, through the mutual fund route, right? Excuse me 1 second. Now, the second option, so you need to keep a track of it. If you cannot keep a track of it, we generally keep a track, ping us anytime. We are also trying to put it on our new product Rezofin, I'll type it for you, trezofin.ai. So you can subscribe to the email and we will also share you which mutual funds are generally opening for new subscriptions, and then you can immediately subscribe to that. Okay. Now, there is another set of option for you where you can actually invest. So going back to my point of ETFs is a very common, popular, very popular investment mode from the United States perspective, right? So there are a couple of funds which actually not directly invest into the ETFs, but indirectly invest into the ETFs in the US market. But the problem is, the best example is that Motilal also on NASDAQ 100 ETF, right? But the problem is this here, what you need to watch for. So for example, the actual ETF price, imagine, is 50 rupees. The Motilal will show you something around 55, 56 or 60. Okay, there is a difference between the price. So similar to, right, how you buy a 1 unit of mutual fund, right? You call it as a NAV, right? The NAV, imagine if it is the actual NAV is 50 rupees in the US market, but whereas Motilal will show you 55, 56 or 60 rupees, it is actually expensive. Okay. So you need to be little careful on if you are subscribing to the international ETFs via Indian route. How you can actually do that? You can go direct also. I'll share that how you can actually subscribe to that in a bit. But be a little cautious on if you're directly investing into the ETFs portion from the Indian market. Okay. Because you'll be paying another 15 to 20% extra on top of that 50 rupees NAV. Okay. Now, there is a second set. This is for the guys who have like, say something like, $5,000 as a minimum ticket investment. I mentioned about mutual funds and those. Imagine like, this is a pseudo PMS product for you, right? So most of these funds, these are the latest funds, by the way. These are all the latest funds which are available from Gift City for you. Okay, you can directly invest, into the Gift City. Again, as I said, minimum ticket size is $5,000. If you want any help, ping us anytime. More than happy to help you, get you invested there. But primarily, what these guys are doing at this point of time is, they take $5,000 from you. It is sort of a fund thing, and they will, invest into the global market on behalf of you, generate returns, and then like, give you back the returns. So the next set, again, on top of the, sort of, you can consider this as a PMS product is, where the minimum ticket size here is $75,000. Okay. But if you're putting in $75,000, I highly suggest you, go direct rather than going and investing, via these guys and paying them the management fees, etc. and all. I don't think it makes any sense, to be frank, to be paying to these guys, at the end of the day, right? You can actually go direct. So one is mutual funds, second is ETFs, Gift City retail funds. These are retail funds, $5,000 funds. And then there is PMS, which is $75,000, minimum ticket size. Okay. Then on top of it, this is similar to the AIF category for you, which is available in the Indian market, where the minimum ticket size is $150,000, which is, I think, close to 1 crore. So there is Ionic Wealth, Mirai, Baroda, Marcellus, Aditya Birla, Rational. So these are all the guys. What they have been doing is it's again sort of a fund structure where you invest and then keep your money for about 2, 3, 4 years, and then they will generate returns for you. Okay, so these are some of the options available for you. Now let's come to the direct part, right? So this is also the most important part. I started with saying, in the Indian market, I think most of you have the brokers, Zerodha, Sahis of the world, Duns of the world, Scriptbox of the world, etc. and all, right? So this is like, you also have an option to go direct into the US market. How do you do that? There are a couple of brokers, which will help you, invest into the US market. Now, look to the right side of my screen. Be also cognizant of the brokerage and commissions, right? Which is very, very important. So, for example, if you can, by the way, anyone can open an account in Vested, IND Money, Interactive Brokers, Appreciate, and Pasa. These are like a couple of brokers that are out there, which are offering you to invest into US market directly. But also look into the fees that they are charging. So why does it matter? For example, if you are buying a Microsoft today or Apple today, with a time horizon of 2 years, 3 years, hey, I wanted to buy, I wanted to forget about it, then might be Vested Finance or IND Money makes sense. But if you're an active investor, so for example, like if I want to buy a Twilio stock, I want to buy a Databricks stock, or I want to buy an Alibaba stock, I want to generate, say, 14%, 15% return each and every time. And then I want to keep rotating my stocks there, right? There you will be paying a decent amount of, brokerage there. For buying, you have to pay $25. For selling, you have to pay $25, which is a lot of money. So, like, to be frank, I started my journey with the US markets. I still, do. Like at one point of time, E-Trade, the broker that I used to, that I still use, used to charge me $6, right? $6 for buying and $6 for selling. Now, after Robinhood came into the picture, which is the zero brokerage, most of the other brokerages have actually made their commission to zero. Even E-Trade doesn't charge now, right? It is 0 and 0. But whereas these guys charge you $25, which is a lot of money, to be frank, right? So you need to be also careful and understand what is your positioning in terms of, are you like, opening an account, putting the money there, forgetting about it, say like, buy an Apple stock, like, forget about it, or are you actively, churning it out, right? So based on that, you pick up a broker and work accordingly. So for example, Interactive Brokers is only $3.50, which is decent, But it is not that easy to open an account. You need to send some material to them. It will take a lot of time. Vested Finance, you can actually open an account in less than 5 minutes or 10 minutes. But the caveat is you are paying a high brokerage rate. Now, what can you do with this direct? Okay. So whether you invest or not, I think I highly recommend to have a broker for you, to open a brokerage account, irrespective of whether you're investing or not, because opening, they don't charge anything, right? Now there are two things that you can do within the direct route. Okay, when you open a brokerage account, one is this. One is primarily this, right? ETFs. What you can actually do is you can actually figure out, see if you open a direct brokerage account, and then if you send the money out, you can figure out what are the best ETFs that are available and you can buy them directly. You're not paying anyone any fee here. What did I say here? If it is 50 rupees now, you will be paying additional 15 to 20% on top of it. But in this case, when you're buying directly, when you're actually, trading directly, when you have your own brokerage account, the money is all yours. So identify the best performing ETFs. It could be a semiconductor ETF. It could be, I think we are betting very big on uranium ETF going forward, because of the data centers, etc. and all. Okay. So you can figure out what is the best ETF. There we can add value. If you need any help, reach out to us anytime. So buy that ETF and forget about it, right? That is one way of decently making money, to be frank. If you feel that, if you have conviction on certain stocks, so for example, it could be some data center stock, or it could be some uranium related stock, right? If you feel that, that stock will do exceedingly well in next 1 to 2 years, I just want to buy and forget about it. Okay. Again, this is the best option for you. Okay. So you have total control on the stocks as well as the ETFs that you're buying, irrespective of whether you're investing or not. Highly recommend you to have one of these brokers. Just do your evaluation, analysis, etc. and all. I have given you the charges here at this point of time. You do the analysis and then you can have 1 or 2 accounts as well, right? There is nothing wrong with having Vested Finance and Interactive Brokers both. Okay. So that's one part. And I think I covered this, already. Overseas and mutual funds which are still accepting, subscriptions, etc. and all that, right? So, oh my God, and there are people who also. Okay. This is more to do with, UCITS and US estate tax is more to do with, the people who are putting in a lot of money. I'll briefly touch on this. Might not be relevant for everyone here, but what does US estate tax means? So for example, if you have a $60,000 that you have invested or more that you have invested in the US market, and supposedly, unfortunately, if the individual passes away, the worst part there is, to take the money out or to pass it on to the next kin and kith, US actually taxes 40%. Okay, that is actually called inheritance tax. I think India is also mulling over, putting in the inheritance tax, and there is a lot of debate in budget and people are pushing it back. But this is one of the biggest problem in United States. If you have more than $60,000 and something happens to an investor, if they want to pass it on to the next kin and kith, they have to pay 40%, right? So UCITS is a different thing. Let me not go into this. So UCITS are primarily are structured in Europe. They are more of Luxembourg and structures at this point of time. So, but I don't think it is a relevant discussion for this audience. But just letting you know on this, right? So yeah. Now we discussed why global, how you can invest, what are the different options, direct, mutual funds, the retail investor 5,000 product, there is a $75,000 product, and there is a $150,000 product. Okay. Now the important question is, what is the tax look like, right? So the tax looks like this, right? So if you let me talk with the direct US ETF, right? Which we discussed in detail at this point of time. For a short term, it is a slab rate. Okay, so slab rate is somewhere around, I think 30% or 35% or something there. But if you are investing into an ETF and if you are holding for about 2 years, you will be paying only 12.5%. Got it? Okay. So similarly, with the Indian mutual funds as well, right? Short term again it's a slab rate, but if you are, here in the long term is 24 months, which is 2 years. So 12.5% is your tax. So ideally, to be frank, like what you need to do is you need to invest, in the US market, and each and every year when you are actually filing the taxes, you need to tell the Indian government that what I have in investment there. I think there is something called as a K form, which is available by most of these guys. The most of the brokerages give. You have to tell your CA that okay, hey, file this form along with my income tax to tell the Indian government that I have money outside, right? The problem is you have to do that. Don't skip that. The Indian government actually feels if in case if you're not filing that, they feel that you're actually they say that it's black money and all that, and the penalties are super high, right? Like there's no point of taking panga with Indian government and Indian taxes there, right? It's just a simple form, give it to your CA and inform the government that what, I have these investments, sitting abroad, etc. and all that stuff. Okay. Whenever you are redeeming it, you pay the respective taxes. People feel that, oh, what, I think if it is US government, you have to pay taxes, blah, 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 and all that stuff. Most of the taxes are paid at the Indian level only because US and India has a DTA. Okay. Oh, perfect. So I think let me quickly summarize, and I'm then more than happy to take as many questions as possible. As I said, aim for 60-40. 60 is India, 40 is global. And then you have to, within that 40 also, you spread it across multiple geographies. You can actually go direct with the US brokerages. The best part with interactive brokers, I'm not suggesting it. You can actually do not only US, but you can also trade in Korean markets and other markets as well. Okay, with the interactive brokers, vested, etc. and all are only catered to the US markets. So you need to have a diversified exposure to US and as well as Japan, Korea, etc. and all that stuff. Okay. As I said, strategic, tactical, pick the right pipe, right? This all purely depends on, what sort of an investor you are. Okay. Can you do direct? Every investor is different. Every investor need is different. Every investor, goal is different. So you need to figure out what exactly you wanted to do, okay, with your money, and then choose the structure accordingly. Go direct ETFs or go direct stocks, or pick up mutual funds, invest, stay there, or you can actually go to the retail investing, stay there, etc. and all. Purely depends on the investor appetite and preference. At this point of time, there is nothing like a one solution fits everyone. Okay. As I mentioned, mind the access window, right? Because these mutual funds, as I mentioned, with the $7 billion cap that is there, they close and open without any mentioning. So you need to keep a track of it very closely. We are tracking it. You can reach out to us anytime, and we'll share when a particular mutual fund opens or closes, etc. and all that, right? And as I mentioned, don't invest. I mean, like, if you don't have any option, if you can't open a brokerage account, if you can't take the money out, you can invest into the ETFs. But investing into ETFs from the Indian perspective, always watch the ETF premium. You will be gate that, like, you will be paying the additional 10, 15 to 20% extra than the existing NAV price. Like, don't lose the money there, right? It's my whole point there. Okay. So estate tax proof, if you go through LRS, don't worry about the usage there. This is purely on the estate tax that I mentioned. But touch wood, hopefully nothing happens. So if it is only greater than 60K, right? If you're starting small, I don't think you should worry too much about the estate tax, at the initial stages. Okay. So last but not the least, I think I always suggest you to have a very good relationship with your banker. Okay. The problem is, if I'm sending the same dollars outside, I might get like 95.35. And if someone else is sending, someone else might be sending it 95.65 or 94.6. The banks are very notorious for that. Okay. So have a very good relationship with your banker and negotiate on the forex. When you are actually buying the dollars and when you are taking the dollars out, of the country, always and always negotiate very, very hard. Okay. The reason being, even a 0.1% or a 0.2% actually makes a lot of difference. Okay. So the forex exchange and the forex negotiation is a very key important part, and have a very good relationship with your banker on that and negotiate very hard. Okay. So yeah, that's what I wanted to talk about. I think I covered a decent amount of stuff. So happy to take any questions. Feel free to unmute. PPTs, please kindly ping me now, and then more than happy to share. Yeah, happy to take any questions, guys. Then can take it from there.
Kiran, I have two questions. Kush this side.
Sure.
Hi. I heard that Zerodha is also bringing international, investing portfolios for the investors. So is it correct or like?
They're struggling, to be frank. I think they're
Okay.
not able to figure out. See, even if they do, they will actually do it via Gift City. I think 1 second. I think I forgot this part. There is NSE also opened up, but see. Yeah. Check out this thing, NSE IX Global Access Platform, right? So NSE is also sort of opened up
NSE IX.
IX. Yeah, I'm putting it in the chat. Just give me a second, guys. Okay. So NSE has recently opened up, they wanted, say how we can invest in the your Indian market. They wanted the option for Indian investors to participate in the global market. But the challenge there will be always, right, the liquidity there, and if your order goes through, etc., and all that stuff, so again, it's still at a very initial stages, but you can keep a track. I think you can also take a look into this website, nseix.com. Zerodha, if at all they're told they won't do direct, they will do it via Gift City.
Okay. And in your slide 24, you talked about the taxes, And so is it like that simple? Because I have never done international investing just because of the fact that, every CA, he discourages about the taxes and filings and everything. So is it like as simple as you mentioned, or is it actually too complex?
It is not complicated. It is actually simple, and with due respect to all the CAs, and I don't know why they do that. Of course, it is very complicated before. Now, I think things have become very, simplified at this point of time. So as long as you have a good CA, the most important factor is, I think getting that form submitted to the income tax department every year along with your income tax. That is a very must. Okay. In fact, I think in the recent budget also, Sitharaman made some changes about, it's not, let's not make it as a criminal offense. Let's kind of give a leeway, might be let the investors pay a certain penalty and then move on types. Because if you don't, talk about that form to the income tax, while you're filing your taxes, as I mentioned before, Indian government considers this something as a black money. Okay. And they take it very, very serious. Okay. What happens is, some brokerages, some guys will give you that form directly. Some, cannot give you that form directly because of various reasons, right? Because of the, because how the audit is done, how the accounting is done, etc., and all that stuff, right? So you need to double check, with whomever you are investing in, that will I get the form at the end of the financial year for me to file with the income tax or not? Okay, so
Okay.
as long as that is done, I think the taxes are at least streamlined for now.
Okay. So if I get that form, I can invest the money for 1 year, 2 years, or 3 years as long as I want, and then get it back into my bank account straight away.
That is correct, yes.
Okay.
And I think once you take the money out, what is the whole point of bringing it back, right? I shouldn't say this, but I'll say this, right?
Sorry, I didn't get it.
No. Once you take the money out, what is the whole point of bringing it back again, right? So let it be there, let it compound there.
Sir, I lost your platform details. Could you please, put it in the chart? The recent one you developed, your platform, sir.
Yeah, it's treasurefin.ai.
If you don't mind, could you please type, sir? Sorry for that.
Yeah, I put it on it. Just check it out first. Any other questions, guys?
Thanks, Andy. Thank you very much.
No questions?
Sir, one question. Of course, like today's topic is completely on the foreign trading and other things, but considering recent changes and global power related or like energy related concerns, what will be our next 3 months or like 4 months observation, and what will be our best mutual funds or stocks kind of thing? Like if you can give very high level, that will be helpful, sir.
That's very broad. Unfortunately, market is very tricky at this point of time. So that's for another session. More than
Sure,
happy
sir.
to take
Sure, sir. I
conversation
know,
on that.
I know it's a wrong question in the wrong situation. Sorry.
No, that's fine. Yeah. Any other questions on the topic? If not, we can wrap up. I know it's Sunday. All good. No questions. Perfect then.
Any platform that you recommend for the investing, international investing?
Interactive brokers, start with that. I think it's not easy to open an account, but I think you can start there.
Sorry, which one?
Interactive.
Interactive. Okay.
Cool, guys. Then thank you so much. I'll share the recording. We'll put it on YouTube. If you need the material and all, ping me. I think you have my details. So yeah, thanks a lot and happy investing. But I keep and I think we keep telling take global investing very seriously, right? So let you work so hard. Inflation is eating your money. Rupee depreciation is eating your money. Taxes are eating your money. How do you protect it, right? So you need to have some exposure there, and I think global investing is the only way. Okay, cool.
Thank you. Thank you very much,
Take
sir.
care,
Thanks for
and
your time.
yeah, take care. Thanks. Bye.